All right. Good afternoon, everybody. Happy New Year. Rich Swerbinski with the Mortgage Collaborative here with the Last Week in Mortgage Today, our weekly whirlwind through all things mortgage industry, and the first edition of this show here in 2021. We're going to continue to do this every Tuesday at 2 p.m. Eastern and continue to incorporate kind of a rotating uh, co-host from our lender member network. And today, I am very happy to be joined by my friend and our very devoted member, fellow Cleveland Browns fan, Jodi Hall, the president of Nationwide Mortgage Bankers. Jodi, thanks again for joining us.
Absolutely. It's great to be here. And I think we have a small order of business before we get started. I would sing, but Rich, happy birthday.
It's my birth. As I've been reminded on LinkedIn today, I was like, about it, like I have an Apple Watch, and like at midnight, I was still sulking from the Buckeye game and was still awake somehow. But the buzz notifications, I don't know how like people know right at midnight how that works and who the people are that are sending the birthday notifications right at midnight. But thank you. And your birthday is what? Thursday, Wednesday?
Friday.
Friday.
Yep.
So, well,
Yep.
happy early birthday to you as well.
Thank
So,
you, fellow Capricorns.
yeah, one of many things we have in common. So, but so for those that have not attended this show before, we do strive for interactivity. So please, any questions, comments, thoughts, anything, jokes, please just feel free to chime in and opine at any point as we go through the program here. So as a recap, the basic format of this show, we spend a little bit of the beginning part of the show kind of going through some of the headlines, the latest headlines in the mortgage industry over the course of the last week. And then I really look to kind of pick the brain of our co-host on the current business climate, things that are going on, things that mortgage company business owners are thinking about right now. So we'll get into a little bit of both of those today here with Jodi. But I guess we got to start the Browns. Unbelievable. I don't want to spend a lot of time on this because nobody besides us probably cares. But the Browns are back.
For sure. Was that your birthday gift? Was that they won their first playoff game in 25 years? No, I think that it definitely does play into mortgages, and it definitely gives us a good distraction from the chaos that we endured over 2020. And I make sure that as we give the numbers on a weekly basis, I keep everybody up to date on what the Brown score was and what happened. And they know if I am in orange on Monday, that is our victory orange. So it's a little torn yesterday about whether to wear orange or scarlet and gray.
I mean, normally this is the time of year Browns fans are talking about the NFL draft, so it's nice to, be talking about being 10-point underdogs to Patrick Mahomes. So,
yep. And I think it's the underdog story too, right? Where most of us are small independent mortgage bankers, and we're confronted with a market that is, likely, some could say that we're the underdog. And I think that the grit that the Cleveland Brown show definitely plays into the mortgage industry, and definitely who we want to be. I always want to be the underdog because I always want to be the Cinderella, the comeback story, sneak up on people.
I didn't think there was any way to tie the Browns win into the mortgage industry, but you just did it beautifully. So good work. Well, Happy New Year. What did Nationwide end up closing in 2020 volume?
2.2 billion. So
Damn.
yeah.
I mean, is that roughly double, right? The year before?
Yeah, yep. Roughly double. I will tell you that we're going to more than double in 2021 and very excited about that. It's not just numbers. I think more importantly than the volume is the culture that we have created to set us up to successfully navigate into 2021. So we're really excited about the year on a number of fronts, not just from what we did from a production standpoint. And a lot of our newer branches that came to us, they aren't even fully ramped up. So we definitely think we currently look like, $3.6 billion a year in 2021 company without having anyone join us. So I think we're going to blow by that.
That is outstanding. Congratulations. And that's a great update. And I want to get into that in a little bit here. I know you and I have been talking about this just over the course of the last week. We're starting to get the sense that 2021 is going to be an even better volume year than all the economists are projecting right now. And I'm excited to have that discussion in a moment here. So, but let's start with some of the news headlines. You weren't one of the ones that stormed the Capitol building this past week, right? No.
No,
Okay.
very much not. I was sitting in my home in Ohio, working away and planning for a successful 2021 with the company.
Insanity. But I get partially what caused that was the Senate runoff in Georgia, significant, I think on a couple different levels. Obviously, it gives the Democrats control of the Senate with Vice President Harris is now a tie-breaking vote with 50 Democrats and 50 Republicans. And that can have impact on the housing industry. Certainly we've talked on this program before, some of the things that the Biden administration has publicly put out there, wanting to accomplish as it relates to housing. And certainly going to be easier, I'm not easy by any stretch, but easier for them to propagate some of those proposals and policies. I think right off the bat, I think there's a much better chance that we're going to get more stimulus, just general stimulus, not related to housing or anything like that, but that can have an impact on our industry as well, correct?
Yeah, absolutely. I definitely think that we will see. I don't think that if there is infusion of stimulus is the question. It's how much and when. I believe that it's inevitable. And, you know, how that impacts us, I guess, it is to be determined because it's, you know, a lot of people that are suffering are really suffering. They're without jobs. So a stimulus package, puts food on the table for them. For those, home buyers that are out there who are still able to work, does that, give them, an advantage to have, more down payment funds or to even look into to making a transition. So I definitely think that the stimulus is inevitable. Again, the amount to be determined, and really, if you're out of work, even if it's $2,000, like how far is that going to get you moving forward? So I think it really depends on how it impacts us, depends on the percentage of those who are still employed, who are getting those stimulus funds that could potentially be used towards down payments on loans.
Absolutely. And presidential nominations, likely easier to get through. All the housing related ones, typically those don't happen right away. Actually starting a new program here on the TMC Connect platform, starting on Friday. Rob Krisman and I are going to do a bi-weekly program called The Rundown with Rob and Rich. I'm interested to get his thoughts on maybe some of the potential appointees there. But one thing right away is our friend here in Ohio, Sherrod Brown, been a senator for a long time, and likely to be the head and the chair of the very powerful Senate Banking Committee. I know our bank members, differing thoughts there on that committee and Mr. Brown and how that all plays out, but going to be easier for President-elect Biden to get the people he wants into the positions that he wants to get them into.
Yeah, I absolutely agree on that. And I did the same segment with you back in October, and we were talking about the presidential election and the impact that it would have. And one of the points that I had jotted down was we're going to see increased regulation if we have a Democratic president. It's inevitable. And I think with Sherrod Brown being over the banking committee, he becomes, the megaphone that kind of changes public opinion about banking. But I was thinking about that and how it feels different now than say 2010 is we've been through that regulation. So I do think it impacts the larger banks to a greater extent. But we knew that we were going to have tighter compliance, and we would see, a change in the reinforcement of regulation for mortgage bankers. But we already are heavily regulated, so I think it feels, less drastic than the impact that we have seen in the past. I do think with, the push towards affordable housing, it has to be paid for some way. And I do think that, Sherrod Brown definitely is going to crank down on the banks to offer more affordable lending. And I think that, a large percentage of that is going to be paid for by tax increases for businesses. So I think that there is huge implication. But again, whether it's Sherrod Brown or if it's any other speaker under a Democratic president, you're going to have, we have seen in the past that we've had that heightened regulation and the push towards affordable housing. So it is interesting to see how that will impact us as not being large mortgage banks relative to large mortgage banks. And I definitely think that Rob Christman will have a more, if not, if he isn't more in depth on that, it will definitely be much more enlightening. And I'm sure that he will be able to add a tremendous amount of color related to what Sherrod Brown, being the chair of the banking committee, will mean to those lenders.
And then, maybe most impactfully to our members and mortgage lenders more broadly, the much talked about first-time home buyer or some sort of home buyer tax credit that was publicly part of President-elect Biden's housing plan with a Democrat-controlled Senate. Certainly that becomes more possible, potentially likely. And that could have huge impact on our industry this year. And, talking about, starting to get the sense that 2021 could be an even better year than projected, and maybe close to as good a year as 2020 was, that could play a big part in it.
Yeah, it's interesting from, the tax credit perspective. There was just this past year, it was proposed a $20,000 cap on the tax credit, and it was declined, and a lot of Democrats declined that as well. So we sit at 10,000 today. So again, I think it will end up someplace in between, because regardless of Democrats holding the Senate majority, a lot of Democrats were against that much of the limit for the tax credit. So I definitely think that we will see tax credits increase. I think that that will help the housing market, but I also think that we're going to have a huge shortage. We're already seeing a shortage in different areas of housing. So even increasing that, I still think there's going to be some constraints. And I also think, capacity was our biggest, that was the biggest problem that all of us faced that are on the call today, likely, was being able to handle the volume. So maybe refinance and a little bit of an increase in interest rates will help level that out to be able to handle the volume. But even, with increasing tax credits, which leads to more home buying power, inventory, I think, is going to be a constraint for us.
Absolutely. And then, kind of finishing up the notable headlines of the week, Bloomberg broke a piece yesterday that is certainly not a surprise, but certainly was an interesting piece. Really, alluding to the fact via sources that the Biden administration is actively looking into and having meetings on, ways to be able to oust Mark Calabria as head of the FHFA. If y'all remember, a year ago, the Supreme Court ruled in favor of the president's ability to replace the head of the CFPB. And Supreme Court currently sitting on a case similar, centered around the president's ability to replace the head of the FHFA. Most feel like it'll go the same route as the CFPB case went last year, and that permission will ultimately be granted to the president of the United States per the Supreme Court, probably not till this summer, though. So basically, the piece went on to say that It seems unlikely that the Biden administration would look to oust Calabria prior to that ruling, unless he tries to start to make moves to privatize Fannie and Freddie. Any thoughts or reactions when you saw that come across the wire yesterday?
I think that my biggest reaction was, please, if that takes place and we replace him sooner, we replace him in the summer. That we have someone who's listening, who is listening to the small independent mortgage bankers and having a say so. We had to be very reactionary last year with some of the changes that were made, and it was like, we're going to add, 50 basis points. Oh, we're not doing it yet. Now we are adding, and it caused a lot of extra tension. So I guess my I don't think that anything is going to change so drastically. I don't think that Calabria is going to be given the autonomy to make any major moves without being removed by Biden. So I don't think that anything drastically is going to happen. I just hope that the choice is someone who's willing to listen to people who play in the world in which they're setting policies and standards to.
Yeah, absolutely. And, I think that the piece also kind of went on to allude that, part of it is, the Biden administration's uh, desire to, a topic you were just talking about, affordable housing programs, options, being able to use the GSEs to help propagate, more options for first-time home buyers.
Mhm.
We all know the inventory issue in America. There's not a lot of affordable housing to buy in America right now. There just really isn't. Things are getting swept up right off the market, going to just the most credit-worthy people. If you are a true first-time home buyer without an elite credit profile, the cost of renting is very high right now. It's something that is not talked about broadly, but is impacting certain segments of the economy.
Yeah, yeah, it will be interesting to see where affordable housing demographically is targeted, and those areas. Is it in areas, because we've seen the investors really get rich when it isn't properly allocated, and the investors come in and they buy up all of what was intended to be affordable housing. So I do think that if we really, as an industry, are going to make a move through affordable housing, let's do it and give the people that we want to give the benefit through to own homes. Then let's make sure that it is regulated so that it is fair.
Absolutely. Moving on, 2021, 2020, obviously an incredible year. The final number's not in yet, but it appears like the year is going to end up at 3.4, 3.5 trillion, which would be the biggest year of originations for the mortgage industry since 2003, and the second biggest year in the history of the mortgage industry. Nobody saw this coming. A year ago, we were talking about, I think the projections were $1.6 trillion, $1.7 trillion, kind of in line with previous years. We end up doubling that up. And out of nowhere, the projections currently, MBA and others, for 2021 is for around 2.6 trillion in originations, a great year, historically speaking. Um, and off 25, 26% from the year that we just exited. But a couple things have happened, I think, since then. Federal Reserve recently came out, again, not any kind of shocking news, but stated their commitment to continue to buy MBS and to support the bond market through the end of 2021. So you're going to have the Fed in there as very active buyer of mortgage bonds throughout the end of the year here, which is going to work to help keep interest rates low. And, the aforementioned stimulus that you're now seeing that has been pumped into the economy with potentially more waves to come. And just the general feeling I'm getting as I talk to people like you that own businesses that are doing their own projections separate from the MBA and Fannie and Freddie, starting to get the sense that this could be a really, really good year for the industry and close from a volume perspective to this past year. How are, forgetting your growth and, just in America, the total origination pie, how do you see 2021 playing out?
There are so many millions of Americans that are sitting at, there is a population of individuals who just won't refi, like it's not worth their time. But there are so many individuals that are sitting at, you know, 4%, 5% interest rates. It's interesting in a small community. You have people who aren't in the mortgage industry and they don't understand what that means to go from a 4%. They're like, well, 4% is really low. It's like, yeah, but you could be at like 2.75% or whatever it may be. And they don't understand what that means. So I think that we take for granted that we've been in the industry for so long, and we're like looking at people like, how can you not? So I definitely think that there's some education that we need to do to continue, even if interest rates go up a little bit, which I don't think that they're going to go up so that it won't be a huge population of home owners that aren't, ripe for refinance. But I think that we have to do our part from a marketing perspective and a home buyer education perspective to show them what that means, to whether it's debt consolidation or for, just, bringing down their monthly housing payments. And then from the purchase perspective, I mean, again, I think it's going to depend on inventory, and home, for home builders, the supplies going through a build myself, and it's astronomical what costs are to build. So do some people, wait it out, and they don't go into the buying market? What happens with the pandemic? Do we continue to be crushed by the pandemic? So I think as a mortgage lender, it has to be cautious optimism, looking for ways to be able to capture different segments of the market, and be diverse in capturing the segment. Because if nothing else, 2020 showed us that anything could happen. You and I have talked to, we had like a 70% decline in applications in March and April because of being so heavily New York, New Jersey centralized from a production perspective. So anything can happen that can completely change the forecast for 2021. And trying to do strategic planning and plan ahead for what the growth will be is next to impossible. But we really are focusing on all segments. How do we get more refinance market share? How do we capture more purchase business from our referral partners? How do we educate home buyers, not only from a refinance perspective, but to educate home buyers on purchasing homes and, giving them the access to the lending that we can? So I think, it's going to, and we're also going to be constrained about how much production we can handle. So I don't think that that goes away. I think that the theme stays the same as we talked about over 2021 from a technology perspective, and being able to use technology so that we can do more in lending, so that we can keep up with the production. I would say that we're still behind from a hiring perspective and a staffing model where we want to be. And I think that many other mortgage lenders are in that same boat. So yeah, the business is going to be out there in 2021, but how much of it can you capture and how much of it can you support is, because we never want to put our loan officers and our teams in a worse position than they already are in. So we have to be careful about that, about the growth.
Yeah, Black Knight and the other big services continue to release these reports just talking about this really still very massive pool of refinanceable people out there. And every time I look at one of them, I'm like, oh my, like same as you, like, oh my God, like it seems crazy, but you're right. There are just people that have not refinanced for one reason or another. We talked earlier about the potential impact for people on the margins of some sort of first-time home buyer tax credit, other affordable housing policies that could really help with those people on the margins that maybe would not otherwise be able to buy a home. But two things I feel like may be underestimated, not being talked about, that could have very positive impact on this year. The first is just, I think, the continued flight of people moving out of the cities and multifamily housing and wanting to move into single family housing. Read a couple columns this week, just talking about trends that have developed lately along those lines. People that own apartment buildings in urban city settings, talking about just big, loss of vacancy over the course of the last couple months. Certainly not all of those people are moving into the suburbs and buying a single family house, but certainly some are. I think that that's a trend that we're going to see continue to trend the same way we've seen it trend these last few months here this year, that could have some unanticipated impact. And then the second is really just, I think there's just a lot of people, and I know a few people like this, and maybe I'm overestimating it because of that, people that want to sell their home for one reason or another, that just didn't this year because of something related to the pandemic. They didn't want to deal with whatever, or, I'm going to wait till the spring. And I feel like some of the projections are underestimating some of those factors a little bit. And, in combination with some of the things you said, it could lead to another really, really huge year for our industry.
Yeah, and I think, on top of just, people moving to the suburbs and what corporate philosophy is on people working remote, and giving employees, if they're going to be in a remote environment, looking at states and areas that have, tax advantages for highly compensated individuals. So I think that, and, on top of that, I think that, the rich definitely got richer in 2021 or in 2020, and I think that will, it maybe won't increase at the same pace. But I also think that we have a lot of people who are looking for second home opportunities, or increasing their investment property portfolio because they have the money. The stock market was, growing crazy like gangbusters, and a lot of people are looking at pulling money out of the stock market. Where do they put it? Is it, increasing investment portfolios, buying second homes? Is it in real estate? Is it in buying land? So I think a lot of that, and just the overall, mentality of where people want to be, and people being able to be remote. I think it will probably have a bigger impact in 2021 than it did 2020, because it was a reaction that worked, right? With people being remote. And now it's like businesses are looking at, well, look at how much I could save if I don't have the 50,000 square foot office. So yeah, people can be remote. And then, then the employee is like, okay, I'm confident that I can continue to be remote, so I can make a long-term change into a different state, into the suburbs, whatever it may be. So I think it's going to have a substantial impact, and I think that we're still going to go back to inventory. Um,
You got to have the homes, right? Exactly.
yeah,
And that I think will be, really the story of the year. And, the people that talk about a bubble, that's their fear, that all these things we're talking about is going to continue to boost demand for bu- uh, buyers, boost buyer demand, but you're just not going to have the inventory to satiate it. And it's going to kind of lead to a bubble. It'll be something we'll be tracking throughout the course of the year. Will be interesting to watch develop. So just a couple minutes left, but just a couple other things real quick. Home Point Financial going public, another big independent mortgage company going public. This is just a wave of them. We got Loan Depot and United Wholesale coming up here, I think both in January. Just a crazy wave of big mortgage companies going public these last 4 or 5 months. Any thoughts or reaction to that?
I think that they look extremely attractive right now. In 2019, you wouldn't look so attractive. So I think that people are taking advantage of large balance sheets and what happened. And maybe the owners have an exit strategy based on their age, or just wanting to do something else. So I think that it's just a consequence or reaction to an amazingly good year and an amazingly attractive year to make them sellable.
We've talked about inventory ad nauseum. I mean, ultimately, the best solution to an inventory problem: build more houses. some impediments to that though, buildable lots, lack of skilled workers, and just, key building materials, the prices being through the roof. Builders can't build homes quick enough right now. Be interesting to see how new construction plays out. I think new construction was up 11% in 2020 over 2019. They're projecting it to be up 6 or 7% in 2021 from this year. That in and of itself, I would not solve the inventory problem. Any thoughts on the new construction part of our business, and maybe how independent mortgage bankers typically have those loans are done by the banks? Is that anything you guys are trying to figure out how to do it nationwide?
So I like to try to be really good at one thing, and construction lending is an area that is very difficult and has huge consequences. So no, not currently. Definitely looking at rehab though, and trying to look at how we can educate home buyers and look at properties that do sit on the market for a lengthy period of time and help our referral partners market to a group that may not have known that a rehab loan was available, and what they could do, for example, with a 203K on a property that had significant repairs that needed to be made. So definitely, we're working towards the rehab model, but not looking towards the builder business, unless we had a really close partner that was able to manage all of the draws and disbursements. And it just is, it's really different from the business that we do. And I think that we have greater opportunity to gain market share in the business that we do really well, as opposed to the construction lending business.
Yeah, absolutely. Well, we're out of time as always, Jodi. Really enjoy talking about the business with you. Thank you for joining me again here this week.
It was my pleasure. Happy birthday, happy new year, and very exciting for what the Mortgage Collaborative has to offer us, as always, as we go into the new year.
Thank you very much. And yeah, a lot of exciting stuff planned for this platform, our TMC Connect platform this year, some new recurring shows, some additional working groups, really going to work to continue to expand the scope of the ways we're driving value to the member base through virtual sessions like this. And you've been a huge part of that. So I really appreciate it.
Glad to be a part of it. Thank you for having me.
And go Brown Sunday.
Absolutely. We need all of you on the call cheering for the Browns.
And more help than that. Yeah. Have a great afternoon, everyone. We'll see you back here, same place, same time next week, 2 p.m. Eastern on Tuesdays for the last week in Mortgage Today. Until then, have a great week, everyone. Take care.